Hey there, Mike Wise, CMG Home Loans, with your weekly mortgage update. Today is October 10th, 2025, and it's been a pretty quiet week for data. So the government shutdown has basically shut down the number of data points that are coming out regarding the economy and how it's doing. I'll go into that in just a second. The number of listings is going up. The length of time properties are on the market has gone up. There's some pockets in the United States where there's a lot more inventory and prices are starting to come down a little bit. But at the end of the day, real estate is still, there's no worry here at this point in time, but it is very, very strong. So let's go take a look at some of the numbers here on the vibe board, and we'll go through what some of these talking points. No BLS jobs data report last week. So basically, the government shutdown, we missed the jobs numbers. ADP was basically reporting that it was not a good number, 32,000 net job losses in September. So when the government comes back up online, the employees go back to work, we will see these numbers from the BLS report. In fact, they've hired some people back to report the CPI numbers next week. So at the end of the day, we'll maybe see the CPI numbers, the inflation numbers next week. Has the real estate market shifted to a buyer's market? I would say there's a little bit more control with the buyers at this point in time. The days on market, it is starting to go up again, but you can see that it is definitely a trend. We are in the time frame where list prices, they're basically staying on the market a lot longer. But we are seeing, we're at the top kind of here of number of price reductions of properties. So even they're sitting. Sellers are getting a little bit nervous. They're getting, maybe not patient enough, but basically you are seeing a lot of price reduction. So at the end of the day, let me talk to you about some of the coolest markets in the United States at this point in time. It looks like down here, Florida is where we're starting to see a lot of softness in the market. So if you want to, get into the market down in Florida, now might be a good time as a buyer to go in there and get a deal. Same thing in Texas as well. So a lot of cash buyers, 32.8%. That is down from 33.4% last year. A lot of cash buyers. What we're seeing there is basically, properties priced less than $200,000 are going out all cash, and then over $2 million properties are going all cash. Everything else in between, you're starting, you see more finance properties. And as interest rates do drop, you will start to see more properties financed, and this number will start to go down a little bit here. So we'll see that. Time will tell as far as that is concerned. Let's take a look at, this is inventory levels for the 10 largest states by population, right? So California, top of the list. This is basically right here what we're taking a look at from September of 2019 to September of 2025. So pre-pandemic to today, what is the inventory level has it done in those states? California is still below those numbers, right? So there's not as much inventory, even though it is going up here, there's not as much inventory. And so the active listings are still below those limits. Now, if you look at Texas and Florida, what I just showed you before, they're up 30 and 22% from pre-pandemic levels. So a lot of inventory there. Once you go down to these lower levels here, which is New York, Pennsylvania, Illinois, those are still below. So really Texas and Florida, the inventories levels are going up. So let's see here. So we're going to go down here. The bond market. So the Fed, in fact, here's interest rates. We'll take a look at that. 6.3 a year ago. They were 6.3. So not much change from a year ago. But let's take a look. I want to show you just gold, where it's at. It's taken a huge jump up over the last week here. In fact, if you look at year to date, this is gold. So you can start to see there's been a big run up. it's been over $4,000 an ounce, and silver the same thing. So a lot of the metals, they are going up in values. That's a little bit of a fear of inflation there, but at the end of the day, what we're going to look at is the Fed interest rate cuts. This is October's meeting. There's a 94% chance that we're going to have a rate cut. So down to 375 at the end of the month. So they're meeting again. It seems like it's coming up quick here again, but we've got to get data out. Now in December, same thing. It's basically, there's like an 80% chance that it's going to happen, that we're going to get another Fed rate cut. So basically the next two meetings look like there is going to be a cut in the Fed funds rate. Now, while that doesn't mean mortgage rates go down, it does mean that your HELOC is going to go down. It does mean that your credit cards are going to go down. It does mean that your car loans will go down. So it does not necessarily translate to mortgage rates. What really drives the mortgage rates is the yield on the 10-year Treasury. And what I'm going to show you here, this is the yield. It's at 4.0977, almost 410, right? It's been hovering. This is, let's take off the 100-day, 200-day, 50-day, and So this is, you can see, this is the 25-day moving average. And over the last, it's been hovering right on that average throughout the last 2 weeks here. So it's basically hovering right on that. One way or the other, I know this sounds crazy, but basically it's either going to break through and go down to 4%, or it's going to go up and it's going to hit like the 418 to 420 number on the yield. So we're hoping this is going to be data driven here. It's right on the trend line. So basically the traders are trading and they're just cautious, and now they're just waiting for a move here in the market with the data, what's happening with the economy. And if we get a move, bad news is good news, and you'll start to see that come down. So if inflation is down, if the job numbers are worse, then you're going to start to see that down. If the if the reverse happens, then you're going to start to see the yield go up. I know it's just numbers here that we're talking about, but at the end of the day, that's where we are with mortgage rates. So that's mortgage rates hovering right around 6.3%, and I don't see them going anywhere fast at this point in time. But if you have any questions whatsoever, I will be available this weekend by phone or by text or email. Just send me a message. Would love to help you out. We're actually going to close the loan in 14 days here from going into escrow to the close of escrow, 14-day close. We're going to close that next week. But anyways, I'm Mike Wise with your weekly mortgage update. Have a great weekend, and we'll see you next week.